Hello everyone, I am Harsha Putta and welcome to my whole lens valuation presentation. The stock in focus is Heineken NV. I recommend selling the stock as it is currently overvalued. Heineken is a Dutch brewing multinational having operations in 70 countries with 165 breweries. More than 50% of the company is being held by Pounding family through holding company structure Heineken Holdings. With more than 19 billion in revenues and 9% market share, it is the third biggest brewer in terms of the volumes. These are the biggest global competitors for Heineken. ABN Beverages and Sabmeller are undergoing a mega merger converting into ABN Beverages. Industry is undergoing secular changes in that highly fragmented craft beer industry is gaining momentum and people's tastes are changing. Now, growth in emerging market is the key factor for this sector going forward. Heineken has always maintained its CFRY levels above the discount rate. The asset growth is highly erratic, mostly driven by acquisitions and sell-offs, but the overall assets have been increasing and so shareholders have been rewarded following the wealth maximization principle. The sales growth is not adjusted for acquisitions or sell-offs and so has been volatile. Operating margins increased slightly in the recent past, but the most alarming issue is the decreasing asset utilization. Comparing with its major peers, Heineken has low operating margins and asset utilization when compared to both ABI Beverages and Sabmiller. Heineken has lower asset turns than the industry mean and median. Heineken has below average balance sheet rating, with asset quality being the main reason for this dismal rating. When compared to its industry peers, Heineken has higher multiples, which are not justified by any competitive advantage, indicating that the stock is overvalued. Using flex valuation in highly optimistic scenario where sales grew by its 10-year average of 7% and are considerably improving margins and asset turns, the stock is still fairly valued. Looking at valuation metrics, the stock is overvalued in most conditions and appears fairly valued only with highly improbable CFROI and asset growth projections. Looking at a historical graph, actual price closely followed the Holt warranted price with only 3% standard deviation, increasing the confidence about Holt forecast that the stock is overvalued. In conclusion, Heineken stocks seem overvalued due to weak industry outlook, low margins and asset turns, and volatile sales. So, the recommended action is to sell the stock at current price. Thank you.
Created using Powtoon.